Hey everybody, this is Matt Thomas at tradingparadigm.com, and today I want to talk about the three phases of the trading day: preparation, trading, and review. This is an extremely important topic to cover because most novices only concern themselves with the trading session itself, the time when they're actually placing and managing trades. They roll out of bed a couple minutes before the open, turn on their computer, launch their trading platform, and think they're in a position to succeed. But I can tell you right now that without a consistent daily routine of proper preparation and review, your actual trading won't be very good. How you prepare before the trading session and review after the trading session are leading indicators of your trading performance. These two phases are really where the bulk of the work takes place. I'm not trying to downplay the importance of the trading session itself, because proper execution during this phase is definitely significant, but what I am saying is that proper execution is next to impossible without strong elements of preparation and review. Don't forget that as a trader, you're an elite performer, much like that of a professional athlete. And if you're just showing up at game time without consistent study, practice, and training, then good luck competing and succeeding at a high level. So let's break down each phase of preparation, trading, and review so that you can get an idea of what each phase should entail. If each one is approached correctly, it allows you to build meaningful habits and skills, learn new things, gain experience, and continuously improve over time. So it's imperative that you take full advantage of these opportunities. First is preparation, which is your routine before you even sit down to trade. This can vary a bit from trader to trader based on methodology, but generally speaking, it should include some sort of higher time frame contextual analysis. What are overall market conditions? What's the posture of the market in various time frames? What are the most important reference areas, zones, or levels? Then based on your individual analysis, you can craft plans or hypos based on situations you want to take advantage of. You might have 2, 3, 4, 5, or more plans for various scenarios, like how the market opens, what levels get tested, and other potential factors. But writing these scenarios down and running through them in your mind prior to them even happening prepares you for whatever the market throws at you in real time. This is a vastly underrated method for proactively avoiding impulsive and irrational trading. Being prepared doesn't guarantee that you won't break your rules or go against your plans, but this process paints a clear picture in your mind of what you should be doing. This phase also includes elements of peak performance that often get ignored, like sleep, hydration, nutrition, meditation, exercise, and more. These components are highly correlated to mindset and overall health and should not be neglected. The market isn't a good place to be spontaneous and search for thrills, even though many people who participate in it do just that. But if you actually want sustainable success, you need a strong routine, checklist, launch sequence, or whatever you want to call it for structure and consistency. Second is the trading phase, which should be devoted to the execution of your plans generated within the preparation phase. When properly prepared, little to no strenuous decision-making should be taking place during market hours. If a scenario outside of what you've planned for in the preparation phase occurs, then it's probably a good idea to stay on the sidelines. Sometimes no trade is a good trade. Over time, in-the-moment discretion can certainly be improved with skill and experience, but far too many novice traders act like they have market intuition when they don't. These beginners who think they have a high level of intuition are typically just looking for action. They want to be in a trade for the thrill of it. But good trading can actually be quite monotonous and boring at times. Just waiting for things to align and then effectively executing when the time comes. It requires a great deal of poise and patience. There's no doubt that the market can be a provocative environment, and having money and oftentimes your ego on the line can bring up all sorts of destructive thoughts and emotions. So this is why mindset journaling is a critical aspect of the trading phase as well. In order to release feelings of anger, frustration, joy, sadness, or whatever the case may be, before they manifest themselves into impulsive actions that go against your rules and plans. Documenting these internal factors, along with the numerical aspects of your trades, like entries, exits, gains, losses, and more, also support the last phase, review. This is the time to reflect upon your plans and your execution of them. Were your plans detailed enough? Were you prepared for all high probability and good risk-reward scenarios? Did something happen that gave you an idea for a new setup or strategy? Did you follow your process or make impulse, FOMO, or revenge trades? Overall, the entire point of the review phase is to reflect upon the data generated by the market and how you personally interacted with it, with help from your trade log and journal, and use that information or feedback to find areas for improvement. You're taking an in-depth, honest look at your entire process in an effort to refine it every single day. This is what it means to be an accountable, professional level trader. Remember, there are no leagues separating participants by age or skill level in the markets. Everything is the majors, so a surface level hobbyist approach just isn't going to work. To wrap things up, being a consistently profitable trader requires hard work and dedication both inside and outside of trading hours. Most people, however, skip over the preparation and review phases because it's so easy to get involved with the trading phase. There are virtually no barriers to entry. Almost anyone can open up a brokerage account within a day or two, fund it, and start pushing buy and sell buttons. Those steps are easy, but there's a gigantic difference between the mere act of trading and being a consistently profitable trader. Trading right, effectively, and sustainably is an entirely different story than merely being a participant. And unfortunately, most participants aren't willing to put the time and effort into proper education, training, and following the right process day in and day out. Please don't undercut your personal development and overall performance by ignoring any of these three phases. The non-trading phases of preparation and review are far more important than you might have initially thought. You can find the link to this full article down in the description, and I'll talk to you in the next video. Take care.